Protect yourself against infectious diseases like coronavirus and lifestyle diseases like high blood pressure using ultra-modern medical equipment such as face masks, N95 and 3-ply face masks. Medical coverall suits and face shield masks prevents your body from getting in contact with a virus or bacteria. Often check your body temperature using infrared thermometer. Check your blood pressure using automatic blood pressure machines. This message is brought to you by Leviton Investments Limited, importers and distributors of high-quality medical equipment, located at Arowa Park Plaza, shop number 619 and 620 Bench, Wanoka Street. Leviton, caring for your health.
Now, for the first time, the insurance industry in Uganda has attained the 1 trillion mark in gross premiums collected. That is for the year 2020. Now, the industry collectively managed to collect 1.3 trillion Uganda shillings, which is a huge milestone, considering the fact that for a long time the industry has been struggling to convince Ugandans at household and business levels to participate in the industry as policy buyers or owners. But we'll be knowing a little more about that story in our segments that are coming. It is Man and Markets. I'm Charles Boyd, your host. Welcome to the show. Agro-industrialization is a policy prioritized by government. Now, we cannot manufacture planes or motor vehicles per se en masse, but at least we can attain so much in the area of agriculture because we're naturally blessed. And agriculture is one of the areas we understand more, apart from, of course, value addition and manufacturing. But it remains the low-hanging fruit, as this expert mentions.
In fact, the estimate is that Uganda loses about $1.5 million per day because of idle time and poor logistics in the city itself. So I am hoping that, as we move forward in terms of budgeting, that we can also look at Kampala logistics, which, as I said, in terms of trade, you need internal logistics to work as well as external logistics to work. And if you look at this $800 million that we lose per annum, if the people don't lose that money, because it's the people who pay in terms of this congestion, if the people don't lose that money, it would then be disposable income for those people. That disposable income, URA can tax when they consume goods in terms of VAT, and it can also therefore improve our tax to GDP ratio. The same 800 million, if it turns into economic activity, can improve our debt to GDP ratio, which is standing now at around 50%. So in terms of logistics, I would urge logistics infrastructure, as government is particularly focusing on this and has consistently over the years put money on infrastructure development, which is great, but then also to look at Kampala infrastructure development, because if we have a glut of movement in the city in Kampala, then it affects our logistics performance indicator. Also, it affects our general trade in terms of that. Then the other intervention I think I would like to look at, I was really happy also during the speech when the government is focusing on agro-industrialization, because of course a bigger percentage of our population is in agriculture, and it's putting around 1.6 trillion Uganda shillings to that. And that is key because when you look at the opportunities that have been mentioned in the speech as opportunities for Uganda over the next couple of years, the two opportunities mentioned are trade with Africa or African markets, that is catalyzing the Africa Continental Free Trade Area, and then the second opportunity is the oil and gas sector, which is a growth sector. And if we are now to look at trade, one of the key things we have to do, given that our comparative advantage as a country is in agriculture, is industrialization of agriculture. And so that focus on agriculture, industrialization, and value addition, I think, is critical. And in so doing, we need to look at the key products, the top 3 agriculture products that we are exporting, currently. In the budget speech, it was mentioned that coffee is still our #1 agriculture product that we're exporting, running it up to about $500 million we exported of coffee last year, followed by dairy, which was around $200 million, and then fish, which was also around $200 million. But if I just now focus on coffee, yes, our exports, $500 million worth of exports in coffee is great, but we are exporting the coffee bean without further value addition. 90% of that export is actually the coffee bean where we haven't added value. And then we see both Uganda and other African countries import instant coffee. So our coffee goes out there, and then it's value is added to it, turning into instant coffee. And then Uganda and other African countries import that coffee. If we want to catalyze the access to the African continent, if we added value to our coffee so that we get to a point where we even produce that instant coffee, it will mean that we will be the ones actually supplying that instant coffee to the other African countries that are consuming instant coffee, but not Ugandan instant coffee. Others just importing instant coffee from outside the continent. And if you look at the jobs that we export when we export the bean, we are exporting the jobs as well when we export that bean to that country that is going to add value to it. And and on top of the jobs, we are also exporting the byproducts of coffee. Coffee is a major input. Caffeine is a huge input in the pharmaceutical industry. And I know Uganda is also prioritizing the pharmaceutical industry. So we have one of those biggest inputs in the pharmaceutical industry comes out of coffee, but because we're not adding value to it, we then end up importing that input. And then the other major byproduct of coffee is fertilizer, and then also animal feed, but then it's also used in the beauty industry. So my point is that if we target the top 3 agriculture exports as a country, that is coffee, fish, and dairy, that's what we exported the most last year in our agro-industrialization strategy, and added value to those so that the jobs stay in Uganda, and then we export the final product, that will go a very long way in increasing our growth, increasing our economic development, but then also creating jobs and reducing the poverty levels that we do have. But it will also help us in terms of catalyzing the Africa Continental Free Trade Area. We need to look at what do we intend to actually export when we ratify this Africa Continental Free Trade Area agreement. We need to remember that as much as we're going to be accessing those markets, our products will be accessing those markets will also be accessing our market. So we need to prepare, what do we intend to sell to those markets? And the things that we should be intending to sell should be those things where we have a comparative advantage, which are agricultural products. So we need to industrialize and then prepare for that, prepare the private sector for that, and then put money in value addition and industrialization on those major products that we have a comparative advantage on.
There's no doubt that COVID-19 has battered businesses, and indeed the impact that this pandemic is going to have on business is far-reaching and deep. But one industry seems to be resilient and to be riding the storm of this pandemic. That's the insurance industry, and we picked the mind of one of the players to find out how they've been able to stay relevant in an environment where many businesses seem to be reeling from the tough economic times. The insurance industry is now working on positioning itself to remain relevant as the global economy, and specifically Uganda, reels from the impact of COVID-19. Today, the industry is strengthening its operations in 2 non-traditional insurance areas, at least in Uganda, as the economy and households grapple with the halving of the country's economic growth due to the COVID-19 pandemic.
12 months ago, it wasn't a very big risk that you could get a job and you have your salary cut. Now that we know it happens. 12 months ago, we didn't know that as a business, as a person, you would have health insurance that covers pandemics. we knew as Sanlam, because we've been in existence for more than 100 years, the pandemic that happened, the Spanish flu, gave birth to Sanlam, because Sanlam started in 1918 and that was around 1917. So we have this experience. On the African continent, we are the only insurance company with a COVID fund, with a pandemic fund reserve, and we released that last year through offering to the government, through offering to the customers. We gave the government about 285 million. We gave the customers 375 million to kickstart their lives. And we paid claims of about 2 billion to people who lost their jobs and people who were admitted because of COVID.
Besides strengthening crisis-responsive policies, there is a deliberate drive to grow the financial services side of business, which also combines savings and investments, especially at this time when traditional investments bear the brunt of the COVID-19 control measures, which have ground some to a halt.
And our purpose is to ensure that people live with confidence, go about their day-to-day lives normally. And one of the things we do to get that happen is offering them financial service solutions which are not banking. We don't do banking, we do insurance and asset management. And in so doing, we offer products that offer protection, savings, investments, and retirement.
Asset management, the role currently played by Sanlam and a number of other players, refers to the management of investments on behalf of others by a financial services institution or an individual. For these particular products, the major target has been institutions like the pension funds, such as NSSF and other collective savings schemes, but they are now being scaled to bring on board individuals, more so at this time when few can physically deploy their capital due to COVID-19 related movement restrictions.
Some of the people in the room might not know that Sanlam has an investment business in Uganda. I can assure you it is there. And of the about 3 trillion of assets under management for fund managers, the private money that is being managed by investment managers, we account for about half of that. So we don't make a lot of noise, but we are the elephant in the room in that regard.
As it is at the moment, the insurance industry seems set to ride the tide presented by COVID-19, even as many players in the economy post depressed performance. To industry observers, this has been helped by innovation, which has seen the development of new products and consequently a 9% growth rate in 2020, which has for the first time in Uganda's history seen the sector breach the 1 trillion performance ceiling, posting 1.3 trillion shillings in total collected premiums last year. We'll now take a very short commercial break. Manan Markets continues after this break.